Let's start with the markets this morning as we wrap up a strong October for stocks. Jim, the Dow stack gets a lot of attention, but best October since 1901, barring some disaster today.
Right. I sent a piece out I do a Sunday night piece for Investment Club members, and I said the tech tyranny is over. It's done. No longer will we be hostage to a dozen companies that are outsized in growth, and those are now shared donors to a lot of companies that, frankly, buy back stock and don't have stock-based compensation. So I think that this is a pause, but bears don't get excited. And Mike Wilson's not excited for the bears. So, David, one of the things that's happening is, take your Emerson deal that you mentioned, okay? Emerson doesn't have big stock-based compensation. Emerson doesn't inflate the world. You look and see they hire. Emerson is a lean team. And something like this truly matters, particularly because if you take a look at inflation peaking, which is what Mike Wilson's saying, it makes a great case for Dow Jones stocks and the like.
And the like.
Emerson's the like.
And explain why.
Well, because what we're having is companies that already knew how to fire, companies that never hired back, companies that really understand, when you speak to some of the industrial companies like Jim Umpleby from Caterpillar, I spoke to someone downgraded today. I mean, they've been waiting for this moment. It's very strange. The industrials have been waiting for the moment. The tech companies have been caught completely blindsided. They were still in hiring mode going into this quarter. A lot of the hiring, just so we know, was not done in the months of June, July, August. The hiring was done May, April. And now it's very hard to fire people that you just hired. But that's what's happening right now.
Coming off what was not a good week, Carl, for the earnings from most of those companies you're looking at. Netflix was a couple of weeks back. That was pretty good. Apple was fine. But then those other three, all last week, not well received, and yet the market powering ahead anyway, given that rotation that Jim's talking about.
We're about halfway through earnings, a little bit, maybe two-thirds if you're looking at reports by S&P earnings in dollar terms, and missing by about 1%. Be about the third quarterly miss since the great financial crisis. Again,
heavily influenced by tech, particularly by big cap tech, and I think we'll look back and say it was the twilight of the idols. You have these companies, $500 billion to $1 trillion, with the exception of Apple. We'll go into that in a second. That frankly got very overvalued, even though we thought that their PEs were shrinking. David, it turns out that the estimates were too high. And then we have a whole nother group.
I mean, some of the numbers, though, to be fair, like an Alphabet, the multiple, which, of course, many had said prior to the latest earnings was very low, remains very low.
I'm glad you mentioned Alphabet, because there I think they got caught. I think they were hiring, and they realized, wait a second, things are slowing.
They hired 12,500 people during the quarter.
You can't
those are not warehouse jobs, by the way. No offense to Amazon, which hired hundreds of thousands. These are high-paying jobs.
I think you're going to see a level of discipline that's going to, of these ones that I do think Amazon's going to get religion, I think Alphabet's going to very quickly get religion, and that's the one that you should not sell. I think that they did buy, they hired a lot of people. I think they regret it. And people are selling it now. Carl, they're selling Alphabet because others are selling it, and they're deciding that they didn't make inroads in cloud. I think cloud, it does cost a lot of money. YouTube was good. Strange piece about Roku today, correlation with YouTube, but I think that Alphabet is a company that is that's got the ability to switch to discipline, and will do so. Amazon, I think, wants to, but holy cow, they have to have a firing squad. I mean, they have 500,000 too many people.
They hired a prodigious number of people during the course of COVID. Yeah,
right, and
hundreds of thousands.
It's very hard to lay off. Carl, I mean, if you want to lay off 25,000, you can do a reduction in force. It's not good, but if you try to Amazon is very much like when my dad was in World War II, and they had you had millions of people all over the place, and they were suddenly not in the Army anymore. Except for they're not the Army; they have to deal with laying people off. And there were 800,000 that they hired, which is an army, and I think they probably have maybe 600,000 too many.